Welcome to the Daily Market Comment by Rafi Boyajian. I'm Cristina Marucos, and thank you for joining us at XM.com. U.S. stocks ended their 5-day winning streak as hopes that the U.S. and China would still be able to get the trade negotiations back on track at the G20 summit fast dwindled. President Trump told reporters on Tuesday that it was him that was holding up the deal and accused China of going back on 4 or 5 major points, adding that he would only agree to a great deal or not do a deal at all. His remarks have left investors with low expectations going into the G20 summit at the end of the month. Neither side has confirmed whether President Trump and President Xi will meet on the sidelines of the summit, raising the prospect of a prolonged trade war that is on the verge of becoming an economic war. Despite the disappointing headlines, overnight losses on Wall Street were fairly limited, but shares in Asia, though, fell more steeply today. With no end in sight to the Sino-U.S. trade row, expectations that the Fed will cut rates at one of its upcoming meetings remain elevated. Softer than expected producer prices out of the U.S. yesterday for May further fueled bets that a rate cut could come as early as the July meeting. There will be more inflation data today with the release of Consumer Price Index. Headline inflation is forecast to moderate to 1.9% in May in what would be another sign of easing price pressures. The dollar halted its rebound from the NFP-led losses, and U.S. Treasury yields also reversed course, boosting the safe haven gold. After coming under pressure earlier in the week on rate cut signals by the ECB, the euro was on track on beating last Friday's 2.5-month high. The euro also got a small boost from fresh comments by Trump on currency manipulation, who tweeted, "The euro and other currencies are devalued against the dollar." The weaker greenback also helped the sterling, even as it becomes increasingly likely that a hardline Brexiteer will replace Theresa May as the next Prime Minister of the UK. There was additional support for the pound from a healthy jobs report out of the UK yesterday, as well as a series of hawkish remarks by the Bank of England policymakers. This was today's Daily Market Comment. Thank you for watching us at XM.com.